What's going on, y'all? Welcome back to another video. Today I'm going to be showing you guys how I made $4,200 just in 15 minutes. Know what I'm saying? This model is strictly time-based. There's foundation to it: entry, stop loss, take profit. I trade this model merely every single day. I look out for it every single day. Know what I'm saying? So it's something that I'm very familiar with, and I can explain it very well to the T. Know what I'm saying? And not just a random setup or something that I caught. I actually trade this same exact model, or at least look for it every single day. Sometimes I may not get it and I may trade something else, but for the most part, this is where I'm making my money. Know what I'm saying? So if you want to see that, make sure you like the video, keep watching the video, subscribe to the channel so y'all can get more videos like these, and let me know if y'all want me to do like more chart work, you know what I'm saying, in the comments, chart videos. But let's get right into it. All right, y'all, let's get right into the video. So the main thing about this trade is this black line right here. And you may ask, what the hell is that black line? That black line is the sell side target that made me go long for that trade. You know what I'm saying? So let's go. I went long that day. I was bullish. And at the beginning of the day, starting at 9:30, we had a run down, taking out this weekly low. Boom. Y'all see that? Taking out the weekly low. Now I'm going to go down to the 5-minute chart. And this is our 9:30 candle. And you see 9:30 ran all the way down and took out that low. Okay. Now, if you're new to my channel, I always say that before I look for any buy setups, I want to see manipulation going lower, taking out some sell side liquidity to fake traders into thinking that we are going to continue lower. You know what I'm saying? Vice versa, if we wanted to go lower, I would want to see price have a fake move up, taking out buy side liquidity before we go lower. You know what I'm saying? All right. So starting out the day, came down. We took out that weekly low. Okay. And at that weekly low, we have a fair value gap right here that's being made. Now, a lot of people may think that that fair value gap is a tradable fair value gap to go short. But you do have to remember that we literally just took out a weekly sell side low. You feel me? So there's not really any more sell side to grab after we take out a weekly sell side low, for this to, like, there's nothing else down here. We already took out the sell side. So I'm anticipating for this fair value gap to get inverted. Inverted is to get traded over. I want to see candles trade over this fair value gap. And let me just show you guys the trade real quick. So boom, boom, boom. All right, this was the setup. Okay, glance at it. Cool. So after we inverted this fair value gap, that lets me know that this fair value gap is not going to be used to go lower. And since we already took out all the sell side, I'm expecting us to start a buy order flow program to go run some buy side liquidity or run into a premium of the range. You know what I'm saying? And another important thing about this trade that makes this trade wouldn't happen without this one aspect, and that aspect is time. You know what I'm saying? So at this time too, around 9:45. Oh shit, no, sorry, give me a second. At 9:45, there's a turning point. For the most part, it's either going to be a reversal around that time or a continuation. That's how I catch a lot of my setups before 10 o'clock. Know what I'm saying? So don't take my word for it. If you want to see, go into your own charts and then look at the 9:45 through 10 o'clock, and you will see a bunch of setups in that 15-minute window. So at 9:45, boom, ran the sell side. We start trading higher, trading higher. We inverted this fair value gap. Oh shit. Inverted the fair value gap, and then we have a displacement candle. And with the displacement candle, we have what? A shift in market structure while breaking that high. Okay. So that means now I want to see price on the buy side. I want to see PD arrays on the buy side hold price. I want to see down candles hold price. You feel me? So now, after we have a shift in market structure, price created a fair value gap right here. Okay, and I know I just showed y'all the trade, so obviously I know that I took my setup inside of that, and this was the setup right here. So my entry, I got in long inside of that fair value gap after I already know that we took out all the sell side and inverted this fair value gap. So that's just in case y'all ask, how do you know to trade that fair value gap? This is the first fair value gap in this range after we did everything to not want to go lower. You feel me? Like, we're obviously not going lower in this price range. So I want to trade that first fair value gap. Where is my stop going to be? My stop is going to be under the candle low fair value gap. You see this candle? It makes up the fair value gap. You put your stop loss at the low of that candle. TP here. I'll explain my TP in a second. 1 second. So, boom. All right. So after we break this high, we got a fair value gap. We trade higher. We take out this high. Boom. And then we create another fair value gap. Now, with this is very important because this is the quadrant level of a fair value gap. The bodies of this candle and this candle is staying above 50% of this fair value gap's range. You know what I'm saying? So it's called consequent encroachment. It's staying above consequent encroachment of the fair value gap. So if you take your fib and measure the high and low of the fair value gap, as long as the bodies are staying above that, then you know price wants to get to where your target is. You know what I'm saying? So boom. We trade up and we create another fair value gap. You see the bodies staying above 50%. We get another displacement higher, and then we run my buy side target. And you would be like, bro, like, that's so hindsight. How did you know that price was gonna come here, not go right there, and then get out right there? So this is some sauce for you guys. If you go on this little area on your chart and you see electronic trading hours, if you go on regular trading hours, then you will see this big ass gap right here, right? So on Friday, we closed here at 5 o'clock. And then on Monday at 9:30, we opened and traded lower, taking out that weekly sell side. So now I want to see price run back up into that opening range. You feel me? Because this is a big gap. Price is going to want to fill that in. So I want to see them at least run back into that opening range during the opening range hour, which is 9:30 through 10 o'clock. You feel me? So that's how I got my target is literally at the high end of the opening range gap. And it hit it to the tick. And you see what it did right after. You know what I'm saying? So there's a difference between just picking any random take profit and actually be able to show and explain why you put your take profit there. And I just did that. I easily just showed you guys why my take profit was right there and it hit it to the tick. You feel me? So that was the trade. That was a trade right there. Oh shit. So hope you guys enjoyed this video. If you guys want me to do more like trade breakdowns, and I am gonna do like more chart stuff because I do know that I don't do a lot of chart work. It's just like a bunch of psychology stuff, but I am gonna do a lot more of this shit. So I want to get used to it. You feel me? I feel like I'm a little rusty with explaining the charts and everything like that because I'm more so just do it for me instead of explaining it to other people. But I want to get into that a little bit more. So make sure you like the video. If you did like the video, subscribe to the channel. You know what I'm saying? Help us get to 200 subscribers. And yeah, I'm going to see y'all boys in the next video. Be out.